Okay, so this week we're going to have a look at KPN, which is the Dutch telecom provider, which is in the same business area as, for example, Deutsche Telekom or AT&T or Verizon or Comcast in the United States. And they're in the business of selling you the internet that you require to actually get online. They sell you the mobile subscriptions. They invest heavily in the infrastructure to provide you with broadband. And without any further ado, I think I just want to quickly head into their financials, because what we see with KPN is that their revenue over the last 10 years has been steadily decreasing from 9.4 billion all the way to 5.2 billion, which is an overall decrease of 6.3%, which is not really what we like to see. It means that the business of KPN is very much declining here, and their top line in revenue is decreasing. And we see the same picture here with earnings as well, with their bottom line. We can see it's been decreasing from 3.3 billion all the way to 2.3 10 years later. Now, this is not a good look when we want to invest in a company, because it means you're investing in a potentially dying company. And this is also something that they very much say in the annual reports as well, is that the competition in the telecommunications industry is really quite high. I think they're very much being outcompeted, well, not outcompeted, but very much competed by Vodafone and one of their Dutch counterparts. I think Ziggo is the name that's being thrown around here. And it's a very tough business. So what we usually see in the telecom business is that the telecom providers invest heavily into a certain region of the country, where they invest in the infrastructure and make the broadband available to the many people, and that's the people they can provide their services to. So they very much try to establish a foothold in a certain region. Now, what we did see with KPN, and we'll get to that in a little bit, is that they've actually established quite a foothold in some parts of the Netherlands already, the most populated area. So I think that might be some potential future, if not growth, at least it means that they can maintain their current positions. Because when we look at debt as well, we can see that it's been at 13.3 billion at the start of 2012, because they needed to invest heavily into infrastructure. If you really want to be a telecommunications company, you need to have all the satellites and all the antennas and all the cables in place before you can actually provide your services. So it takes quite a lot of upfront costs to actually get into the business of telecommunication, which is also what we see with KPN here. And we see that they've heavily delevered in the past 10 years, which is a very good look, right? We want a company to delever, because then for us as an investor, it's more attractive to actually invest in it. Because if a company goes bankrupt like KPN, it means that we as a shareholder will probably not get much as in compensation, because first that debt has to be paid off to the banks, and after that has been paid off, then you as a shareholder might get compensated. But I think there is a fair chance that there's not any cash left to actually give out to the shareholders. So we very much like to have a company that has very low debt to really try to mitigate that risk for us. With excess cash, we see a very similar story as with debt, which is to say that they usually use the excess cash to pay down their debt, which is very much what we like to see. They have less cash on hands right now, but that's also because they have less debt in comparison. So not much to say there. Looking at market cap, we can see it was at 7 billion in 2012, and after that it's been very steadily holding around the 13 to 12 billion euros range, which is quite remarkable, I think, for a company through all these 10 years, to maintain a market cap so steadily. Honestly, I think if you're selling puts or calls on this company, I think you're making a fortune. At least it is, historically speaking, right? No one knows what's going to happen in the future, but historically it would have been a pretty good bet. Looking at enterprise value, which is of course the market cap to which we add the debt and subtract the cash, it's really the entire value of the company. And what we see here, that's been decreasing a little bit, and this is mostly because their debt levels have been decreasing from the 2012 levels, but apart from that, not much has changed. Looking at the EV/EBITDA ratio, so this is the amount of years that the earnings of KPN are required to actually pay back the entirety of their company. So how many years does KPN need to operate to pay back themselves, basically? And we can see here on average it's been at around 8 times, which is not that high. It's not that low either, I don't think. It's quite a steady number, really. So looking at the debt level, like I mentioned, they are deleveraging over the past few years. So initially they were at the 4 times ratio, which is not what we like to see. Okay, we like to have them underneath the 3 times ratio, which is the same ratio that many of the big investment banks tends to use as well as a margin of safety. And we can see for the last few years they've actually kind of reached that point. Although I do still think that it's a bit of a tricky business because there's definitely risk involved. But I think for now, at least, we will check this box when it comes to their debt levels. So this moves me to the the cash flow statement. So it tells a very similar story, I think, as with the financials. So we see a steady decrease in their cash flow from operations from 3 billion in 2012 all the way to 2.1 billion in 2021. Now we do actually see that they are kind of remaining quite stable again here for the last 6-7 years when it comes to their cash flow. But now here's the interesting part of that story, right? Because when we move to the next column, what we see is that their capital expenditure, so everything they need to put in the business to make sure that it keeps on running, a new brush of paint, renewing their infrastructure, everything that they require to maintain their business is included in the capital expenditure, and this number is coming down, and it's coming down faster than the cash flow is coming down. So this means that even though it's a decreasing business, their margins are increasing, which is also very much something that the KPN strives for. They strive to produce cash flow mainly by reducing costs, and I think they've been doing relatively well when it comes to that. I think their cost has been relatively low, and if they can maintain this cash flow or even increase it a little bit, because they have been creating quite a foothold for themselves in the past few years, really laying down the fiber cables in the most populated area of the Netherlands, like Amsterdam and The Hague or Rotterdam, really the big places, the big names that you think of when you think of the Netherlands. KPN has really invested heavily into infrastructure in this particular area. So I think when it comes to their future cash flow, I think it's pretty well secured when it comes to that. So looking at their free cash flow, actually, what we can see here that on average, they've really been circling around that 700, 800 million mark, and they've kind of been staying stagnant there as well. Again, it's showing a -8% because in 2012 their free cash flow was quite high, which after then quite have steadily increased. I think they sold some of their subsidiaries in 2012, which kind of explains how they could why they had so much cash on hand in 2013, which they used to pay down their debt. So they sold some of their subsidiaries there, and this is also the reason why in 2012 they had more cash flow, because they were a bigger business back then. They had to sell some parts of their business. Looking at shares outstanding, what we can see here is they have been heavily diluting in 2013 as well. So they've been selling a lot of shares to also gather some money to pay down their debt. It's one of the perks of being a publicly traded company, because of course, if you're a well-running company and you're very much established and you've got a good established cash flow, you very much as a public company use that to really reward your shareholders. But one of the perks as a company for being public is that you can also gather money from your shareholders by just diluting your shares. If you're in a pickle and you need to buy down debt, or you need to invest in a new property or infrastructure, you can gather the money simply by giving out more shares, which is what they've done in 2012. But afterwards, they've never really done it again. So they've actually been buying back some of their stock, not really fast in any way, shape, or form. Actually, quite a slow pace, but they've been buying it back nonetheless, which is very much what we like to see when it comes to shareholder appreciation there. So most of their cash flow, and this is the free cash flow per share that I'll be looking at here, most of this cash flow is actually being paid out to you in the form of dividends. So KPN very much strives to have a progressive dividend. I think they paid about 13.5 cents last year. So 13.5 of this 19 cents that you see here is being paid out in dividends, and the rest was used to either buy back shares or pay down their debt. Now the free cash flow is very much your pro rata ownership of the company. It's after all the expenses and after all the taxes and everything has been taken into consideration. This is the profit, and this is the money that they get to work with, and this is the money that they can reward you with as a shareholder. So in the next column, we look at the price per share, which again is quite similar to their market cap, as you expect it to be it's really been stable around this €3 range. Free cash flow yield, so the percentage of free cash flow compared to the share price at the time, on average they've been at around 6.8 times, which I think is heavily influenced by the 2012 number once again. But even for the last few years, we can see that they've been circling around the 6 to 7% range. So this gives us quite a lot to work with actually when it comes to forecasting their business, which is a bit more tricky, okay? Because there have not been very big moves. It's not like a semiconductor company that one year will do record profits and the next year will be decreasing by 60%. It's really not like that. KPN is very steady in their income because they have an established consumer base. They have their infrastructure set in place. Everything is basically set in stone for them to keep operating their business. And it's very difficult for them to attract more customers, but also very difficult for them to lose more customers. So I think it's a very stable business. And I think that's one of the big appeals of a telecommunications company. But even though their earnings have been decreasing for the past 10 years or so, they actually saw some growth in 2012, and I think with all the infrastructure that investment that they did recently when it comes to that glass fiber, I think they might see a little bit of an earnings growth here in the future. But I'm not going to give them too much, honestly. I think we're going to give them a very mild growth rate here, because we have seen some earnings growth here for the last at least 4 years, and I kind of expect them to kind of proceed on doing that. So I'm going to give them a 1% increase in earnings year over year, which I think is quite a fair statement to make. I'm looking for a market multiple here as well of 7 times. Now historically they've been at 8.1 times, but I want to be conservative. Whenever I make a forecast, I want to take a conservative forecast, and if that beats the stock market, which is when I'm interested. So I'm going to give them 7 times, which leaves me with a enterprise value of 18 billion, minus the debt, add the cash, gives me a market cap of about 12.5 10 years from now, which is very much in line with what we've seen for the past 10 years as well. So I actually don't expect their market cap to move all that much. So this means I expect a stock price 10 years from now of €3.04. Looking at the free cash flow model, their free cash flow for the past 7 years has been steadily around the 16 to 19 cents range, which is a very steady number, and I kind of expect them to be around that and maybe slightly increase it. So just like with the earnings, I'm going to expect their free cash flow to grow by about 1% a year because of their investments paying off, because they can maybe ask a premium for providing a glass fiber service as opposed to just a usual landline. Of course, the margins for that will be higher and bigger. So I do expect some free cash flow growth. I'm going to give them a yield of 7%, which is a bit higher than they've done historically, but that's again because I want to be conservative here. So even with a 7%, I get to a stock price 10 years from now of €3. So combining these two models, which are actually very close together, €3.04 for the enterprise value model and €3 for the free cash flow model, combine the two and it gives me a stock price 10 years from now of €3.02. Right now, I can buy as many shares as I want for €3.04. So 10 years from now, I expect the share price to come down a little bit, or at least like stay around this range. So when it comes to share price appreciation, I don't think much is going to happen with KPN. I think they have a very steady business and they have a steady earnings, and I don't expect them to lose much, but I also don't expect them to grow much. So I think I'm actually quite happy to say that I do expect their stock price to be at around the same level. But then it brings me to IRR, because IRR also includes all the cash flow that they'll be making for these 10 years that we'll be holding this stock. So right now I can buy a stock for €3.04. I expect every single year to obtain about 20 cents worth of free cash flow as an investor. And if you tally that up for these 10 years, it leads me to about 8% return on that investment. So for IRR, I expect 7.5% annual return. Now I always say on average the market returns 10% a year. So I do not expect KPN to be beating this number. I think KPN will very much outperform the market in the 10 years. But maybe that's the price you pay from buying a company that is as steady as KPN, because their earnings have been around the same, their revenue has been quite similar, their free cash flow is very steady, they're not going anywhere, they have their infrastructure in place, they have their customers in place. I think it's a very steady business and a very safe stock to have in your portfolio. But if you're looking for bigger returns, you're a bit of a younger investor and you have a timeline of at least, I'd say 20 years, I think KPN may not be the company for you, because I don't think the risk reward ratio there is worth it. I think it's a very steady stock, and I think it's a good stock to have if you're close to retirement. But apart from that, I would not really advise this stock. So yeah, that was it for this week. That was KPN, the telecommunications provider from the Netherlands. Thank you very much for watching. Don't forget to like, subscribe, and all that good stuff. And I'll see you in the next one. Cheerio!